On today's World Insight, China is set to open its nationwide carbon trading market this month. Can it help China achieve its ambitious carbon neutrality targets? And with a three-man crew bound for China's space station, space experts count the ways the nation can reach the stars. Here is our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei. China's much anticipated nationwide carbon trading market is set to open its door at the end of this month. It means the state will set carbon emission quotas so that highly polluting industries such as coal power plants must purchase carbon emission quotas on the market when they go beyond their allotment. It's seen to help the transition to green technology. So, what new investment opportunities will this bring to the private sector? How will it benefit China's goal of hitting peak emissions by 2030 and achieving carbon neutrality, hopefully, by 2060? Let's turn to our panelists. For the latest on the preparation for the carbon trading market, in Beijing, Zhang Jianyu, Chief Representative of Environmental Defense Fund, China Program. In Washington, D.C., Wu Changhua, Executive Director, Professional Association for China's Environment. In Boston, Michael Melling, Deputy Director of the Center for Energy and Environmental Policy Research at the Massachusetts Institute of Technology, MIT. Ladies and gentlemen, welcome to the program. The end of June, the carbon market will be up and running nationwide. That's exciting, isn't it, Mr. Zhang?
This is the thing that a generation of people have been working since 2011. So it's exactly a decade has passed, and finally we are here.
Ms. Wu, now we know that since more than about 10 years ago, testing already being done in China at different localities. Now, what do you see as the most important characteristics of China's carbon trading market?
The biggest difference 10 years apart is that this new one, which is upcoming online trading, will kick off soon, actually, is a national one. So that's the first. 10 years ago, we started piloting scheme. We called it 7 piloting schemes. So we learned through that process. The second difference actually is the new one, the national one, starts with a power sector, power generation, particular sector focused. While the pilots actually in different regions probably run depending on different things, not particularly one or two sectors, but including more sectors there. I think we learned in that process that pricing carbon is the trend to go, and that has to be part of the solution for climate change issues there. And the carbon trading is already a proven tech policy tool to figure out how to drive cost-effective solutions actually around carbon emission abatement. Yeah.
Mr. Melling, I know you even personally participated in some kinds of consultation in preparation for this National Carbon Trading Center in China. Tell me more about your input.
For many years, partners around the world, and in this case, I was working with the European Union, have collaborated with officials in China and with experts, including, I presume, Mr. Zhang, for instance, in providing sort of a platform to discuss some of the technical issues around emissions trading, to learn from each other, to try to make certain technical standards, certain methodologies be as aligned as possible. And I think, one of the goals is in the long term to also keep the door open to potentially have trading between markets. So for instance, between Europe and China. That may be a long-term plan, but it is something that is being seriously discussed.
Talking about what are the technical issues that should be bear in mind? Mr. Zhang, what do you think are the key issues and parameters that people should follow regarding this new upcoming carbon trading market in China?
I think the conventional view about the carbon market, sometimes people call that a cap and trade. So you need to have a cap and then you need to have trading activities because a carbon market is supposed to help you to find the most efficient way to reduce carbon emission. But I think I also want to emphasize that that this carbon market is joining a suite of market-based policies that is more generally these days being defined as pricing carbon. Because if the world, and certainly China has joined that pledge to peak carbon emission and also to pursue neutrality in the long run, it is really important for us to be able to mobilize the entire society to join in this campaign. And in order to get them to participate, you need to price carbon, because only by pricing carbon that you can provide the assurance that investment going into all kinds of technologies, investments, activities will be financially rewarded so as to provide a long-term and sustainable solution to this probably the biggest challenge that human being is facing together.
Talking about pricing the carbon, that is really a key issue, right? How to price the carbon and where the carbon should be priced with what. And particularly when you see different localities in China having different characteristics in their economic development model. Mr. Zhang.
Pricing itself is actually a complicated matter, right? Because pricing mostly is defined by a supply and demand relationship, particularly with this kind of trading scheme. As we just discussed, that when the pilots were launched in 7 localities, that because of the limitation of the size, the volume, the type of the industrial sectors, facilities were included. So you could argue that they were probably not enough liquidity into the market so as to fully review the true cost of the carbon, and so as sometimes defined as marginal reduction cost. So I think with the national market in mind, and bear in mind this, once it's launched, it's going to be the largest in the world. The total size is going to be close to 4 billion tons. I think that will be really the first time as a nation that China is really trying to get the full potential of this policy instrument.
Ms. Wu, already several thousand enterprises and companies participated in earlier scheme. However, this time we are talking about a national level carbon market. And therefore, it is much more varied and much more, how shall I say, with varieties. So Ms. Wu, how do you see the differences, once again, of economic development model and characters of different localities in China and companies that are in these regions?
So in order for a carbon market to function as it's designed, it does require a lot of conditions. I think it's the conditionalities actually, you talked about the, variables, the indicators. So I think 10 years apart, it started 10 years ago. Now today we have the infrastructure, right? When you need the registry, you need the verification, you need the monitoring verification, and also reporting there, right? So today, before the end of this month, when the carbon market is finally online, the trading, that means actually all the pieces are coming together, right? And the reason why we decided actually to start with the electricity sector, because comparatively speaking, coal, definitely 40%, 43% of China's electricity today actually generated from coal. And coal is the largest emitter, right? Power generation sector produces like 40% of the emissions in China total. So power sector happens to be the most coal concentrated. That's the first target in order to address, the carbon commitments there. Secondly, the power sector, comparatively speaking, very well developed in terms of the system, the infrastructure, right? Monitoring data, if you like, the fuels. So we have very clear picture in terms of the data, the fuels structure, the power generation, of course, electricity, emissions, everything like that. So it's the most mature also to really get all the pieces together to do the trading in order to make sure it's a functional carbon market there. And the government also already planned, and we're going to continue to expand it to other industrial sectors, 7 more actually already on the line. to be there. So compared to 10 years ago, so far I think more than 3,000 companies through those 7 pilot schemes participated in those regional trading platforms. It's not limited to one particular sector, but there are priorities there, like building sectors, transportations there, among others, building materials, stuff like that. Now I think that today is ready. It's another milestone.
But still, I'm curious about, for example, the province of Shanxi, which is a province that relies on coal production and power from coal. So how are companies there likely to participate in this carbon trading market in China? And what are some of the incentives that these places will have vis-a-vis other places that do not necessarily rely on coal that much? Ms. Wu, briefly.
Yeah, it's designed already in the scheme, the China's ETS scheme there already. And one in terms of emissions. So, for any power operator or related to utility, facilities there, if the annual emission is at and above 26,000 tons carbon equivalent emissions, you are covered, meaning you are one of the covered entities there. So it's in there. Secondly, it's not a cap. But in particular, compared to EU ETS, China's current stage of carbon market is not a cap-based; it's intensity target-based. Look at the efficiency, emission, as I said, intensity targets there. So the national policy around the carbon emissions and plus local provincial level target, whatever the targets actually Shanxi province has at this moment, those elements and factors form the foundation to support the trading, right? So it doesn't matter where they are, and as long as you meet a certain criteria, you are covered in the carbon trading schemes there. Right. And through the last 10 years, definitely has built up enough infrastructure capability, to get this ongoing. So I'm not worried in particular, say, whether this is in Shanxi or, Inner Mongolia, or wherever, or Shanghai. This is our sector focus. It's pretty much covered.
This is a very important point, and it's probably also one of the points that China is looking at compared to the others. Mr. Melvin, how do you see the efficiency of making a infrastructure like this to take care of the current realities of China, in which coal is still the major source of power, and there are localities that are much more concentrated on coal than the others?
So maybe I can draw on what Ms. Wu just said. I mean, she gave a very accurate depiction of the technical and sort of design conditionalities to make an emissions trading system. And on a theoretical level, it actually is good that you have differences in the system, because the whole economic efficiency of using carbon trading comes from the fact that some of the entities can reduce emissions easier than others. And by allowing trading, you sort of levelize the compliance costs, essentially. That's where you get the economic efficiency. If you look at other emissions trading systems, such as the European ETS, which Ms. Wu mentioned, which has been in existence since 2005, it also very much initially saw action in the power sector. So there's a pattern among carbon markets around the world. Power sector tends to be sort of the main sector initially in particular. And one particular thing you see in the power sector is that this carbon price can incentivize a fuel switch from coal to lower carbon intensity fuels like gas, or eventually, of course, renewable sources. And that's partly why it's so effective in the power sector. In industry, it's a little bit harder to get to this magical point where the carbon price suddenly makes it cheaper to burn gas than to continue burning coal.
This is a very fascinating topic, of course. People are all experimenting with their own realities. Mr. Zhang, your take.
Starting with the power sector, it's important, but I fully agree with the professor that it is even more important to move quickly to have other sectors included in the scheme. Earlier, you mentioned about the issue about Shanxi, and I think the key characteristic of the national market is that the generality of the coverage. So all of the coal-fired power plants bigger than a certain size will be included. So there's really no one can escape. and it covers the entire country, and also because of the very physical feature of the carbon dioxide. It really doesn't matter where it's emitted. We need to cut it down in this totality. But I think the different marginal reduction costs in the different sectors would really help to stimulate the market and increase the trading activities and liquidity. It's only by having enough liquidity of the market that we can have the true cost reviewed so as to have the right pricing signal for the carbon so as to get investment, so to mobilize the whole country to join the campaign. So I think this is definitely a very exciting start, but I think it's also just the first step, and we still have a long way to go.
Before we go, I do want to ask all of you one question that is, of course, it's likely to be in operation by the end of June. That's going to be a monumental moment. But at the same time, what are the things that you would observe in order to judge whether this national system has been working or not efficiently? Mr. Zhang, briefly.
Well, certainly liquidity is going to be a defining characteristic feature of the market. But I would urge people to be patient. This is just beginning, and also China is building up on the other people's experiences. But we have some special conditionalities in China that also need to overcome. So be patient. The future is there.
Ms. Wu.
I think, as Jamie said, liquidity is important, but at this moment, China is not ready yet because, as I said earlier on, it's not a cap-based. It's still intensity-based, which is aligned with the current national goals and the targets, to achieving capping before 2030. And also, we're continuing to abate the emissions along the line of carbon intensity target. I would definitely, I think, learning through that process, hopefully, it make the case, proves the functionality of the current stage of the carbon market in the power sector. I would definitely look forward to the next stage, say stage 2, when, capping carbon is clearly set as the foundation for the carbon market. And so that, carbon emission reductions will be seen more clearly.
Mr. Melling.
Yeah, so I'll be, of course, curious to see what the prices are that are revealed by the market. And at the end of the first sort of round of trading, how high the compliance levels were. And I think transparency is part of that also. How much do we know about these compliance levels and sanctions if there was non-compliance? And one thing one can say from all emissions trading systems, they're constantly evolving. The European one for 15 years, reforming all the time. So I'm curious to see what the next stage is, as Ms. Wu said, and of course, as it expands to new sectors like iron, steel, aluminum, and so on.
Of course, when China's carbon trading market nationwide is to be in operation by the end of June, China also is watching very closely how others are doing, including in the most developed industrial countries. Thank you so much for the three of you joining us, Zhang Jianyu, Wu Changhua, and Michael Melling. All the best. Thank you.